All right, let's get into this analysis video for this week coming up, which today is Sunday, February 23rd. And I want to take a look at the FX pairs that I follow, the trades that I'm in currently, and FX pairs, ETFs, and actually crypto that I'm following. I'm only following one thing, the crypto. I don't really trade crypto much, but there's an opportunity there that I feel that's worth looking at. So to start off with the Euro USD, you can see still, I mean, we just to backtrack just a little bit, was long down here by 1.02, a little higher than that, but once we got again that big gap down for after Trump announced those tariffs, we had that big gap down, and I actually exited a position here and then re-entered once I saw we started getting momentum back up to the upside, and then this whole pattern here, this broadening pattern, which is bullish. Um, it's still hanging around. We made that push right back up to the previous resistance of 1.05, and then finally on Thursday we had a big push right back to that area, and then again hit a wall at 1.05. So um, I feel like if we stay above 1.4, that's still a good sign, but we definitely need to get above this 1.05 resistance area right here. This is probably like the third time uh, that we've pretty much hit a wall here. But again, I'm staying strong. I'm still holding long positions from down here, and I want to still looking for the exit point of 1.06. And just to recap, the reason why I'm looking at 1.06 is because if I pull up the pivot points for the year, the main pivot point is a little above 1.06, but I prefer to just get out of the position before this point. I'm not looking for a price to actually hit the 1.06. Well, actually, let's say 1.0630. I want to get out just a little before that, so that's still on the table. Still holding on to this long position, and would like to get out around here. Also, on top of that, I told you um, about these broadening patterns that they usually end up terminating about 50% of the way. So if I use the Fibonacci tool that I have customized here, and I use just a 50% point, if I take it from the top all the way to the bottom, you can see that 50% closer to 1.07. So again, if we start trading up here and higher, I'll look to potentially look at short positions up here, and also depending on what we have going on down here. One of the reasons why I wanted to go long, and I was very bullish on this in the beginning back in January, early January, is because we had that bullish divergence, and then you know right now I'm looking to see potentially we hit the hidden divergence, which would be a high from this point up to a higher high on the MACD, but a lower high um, on the actual price action. So that's what I'm looking at right now. If we move over to pound dollar, same thing. Regret getting out of this position. So when we had those big gap down on the tariffs again, I was actually long from these bottom wicks here, which is the most ideal trade positions that you can enter based on this pattern. But again, same bullish pattern. We had that big gap down and a very nice recovery for the pound dollar. Um, same scenario, similar to the Euro USD. If I take a look at the yearly pivots, we're actually almost there. I was looking at an exit point at 1.26, 1.27. We're definitely crossed above 1.26 at this point and almost at 1.27, but I'm no longer in this trade. I actually exited a long for small profit down here about 1.23. So very small profit, but my focus was more on the Euro USD. But it's good to see this one play out, and then if we do get up to this point, then I'll look for potential opportunities for a short um, on the pound dollar. So moving over to USD, JPY, dollar yen. I talked about this divergence here on the MACD. Just pull this up from that point here, right? The MACD wasn't making any showing it wasn't making any equal high or a higher high, and it looks like it was losing momentum along with the this momentum over here, right? It was losing momentum. Then we had a nice down move. Wasn't really focused on the USD JPY because I felt like the opportunities on the euro dollar and pound dollar were much more clear. But nonetheless, this was a really good trade if you got involved into this one here. So that's all pretty much. I'm just holding on Euro USD. I still have a price target 1.6, and I would like to stay above 1.04. We'll see what we get this week. If we can stay above this point here and continuing to show some strength to the upside. Moving on to the ETFs that I'm looking at. I actually look at the ETFs on the weekly scale. SOXL, been involved in this trade now for about 6 weeks. This small wedge here and this hidden divergence, well, I like to call it a continuation divergence because you see a low here. This didn't really make a low. It's just making kind of like a consolidation wedge here. And the MACD was making a lower low. So I was expecting for this originally to push up and blast off to about $40. I'm holding on to an average about 30 still. How we closed on Friday, I mean, you can see this is a weekly chart. You can see how it attempted to break to the upside and just completely wiped out all the gains and ended up actually on the negative side for the week. But still looks okay. Price is still in the wedge. I actually was long, I'd say all the way back in early January when I started spotting this. And then we've had big green up days, and we had this downward here and then a significant gap to the downside, but we recovered a little bit. So overall, still, this is still in play. I would like to get out at $35. Considering we start seeing some strength, right? Depends on the strength that we see. 35, I'm okay. Like I said, I'm averaging in at $30. So I would like to get out and just reevaluate. This is pretty much a consolidation here on SOXL. Other things I'm looking at for the ETFs, TQQQ. I like this one, but I just stood away from it from wanting to go long. Like this is also similar to what I was just describing on the Euro USD broadening patterns and pound yen. It's kind of how like distinct broadening pattern where two trend lines start diverging away from each other, showing some potential move, strong move to the opposite side. So in this case, potentially to the downside. But just I'm not really buying 100% yet on the fact that we're going to see a strong move to the downside. Although, if I zoom out and we take a look at the MACD, it's showing a potential loss of momentum, right? And you see how the wicks start getting sloppy up in here, big down move, followed by small up moves, down moves. So it's just really not really going anywhere up here. So that to me is pretty risky. I don't want to get involved here. I would rather wait for a move down and start looking for buys. Same thing here, SSO. I'm looking at, you can see the divergence across here, even though we start making higher highs. But I want to see, this could easily be from here. You see this one move here, pull back, a nice another run, and we could be setting up for another pullback before we start making another run. So I'm not looking to buy this, but I am keeping an eye on it. QQQE. Same thing here. Spotted looks like a little wedge here. This doesn't look an ideal area for me to want to go long here. I would wait. I would prefer to wait for a pullback and then ride out on long positions. Right? You see this really nice move to the upside, a pullback, and then of course it looks like creating some type of wedge along with MACD showing a loss of momentum. Right, but all this could go out the window if we start pushing much higher and start finding some support, and it just continues on, over 100 again. So we'll have to wait and see, and that's what I'm looking at for the ETFs. We're moving on to cryptos. Matic is one that I've been keeping on, and it's been trending on to the downside since 2021, but it's making a large descending triangle, always finding some type of support around 29.30 cents. And that's pretty much where we are right now. But I really like the fact that the MACD has been diverging up during this whole time. So, there's potential for an opportunity here. I took the opportunity, nothing to lose here. We start trading around this zone and we start getting a little bump to about 40 or 50 cents, or higher. That would make for a really good trade. But if there's going to be some type of bounce, I think potentially it'll be around this area, uh, close to about 29 cents to 30 cents. And then, a nice area of support uh, based on the history of the data that we have here. So that's going to be it for this analysis. Again, I'm just focusing right now on the position that I have on the Euro USD, SOXL, and the Matic is more of a long-term play and just a wait and see type of mode for that trade. But again, we'll see. The big factor here is we get over 1.05 and we just gain some strength to the upside to potentially hit the 1.06 area, which if we look back here, there's actually some type of support, resistance in this area. And that's where ideally I would like to exit and complete this trade. So with that said, we'll see what happens going forward. The market's going to open up in terms of FX in almost about an hour and 15 minutes. So we'll see what happens. I don't expect anything to happen now, but we'll see what happens on tomorrow, Monday, when the equities markets are open, or actually pre-market around 8 o'clock, where things start moving. So with that said, we'll see how the week goes. And like always, good luck and trade safe.